for having brought all of us together. I really want to thank you for the opportunity to speak at this important event, South African Trade and Investment. We're grateful to the organizers, participants and sponsors who have joined with us here to address the key challenges of collaborating to promote investment, trade and industry. Let me start by outlining our current context and our core developmental strategy. In the process, I will then highlight the opportunities that are emerging for investors and other stakeholders. Just a little bit about the context. One reason we support this kind of event is because we as South Africans need to work together to respond to the worsened or turbulent global context. We need partnership, solid partnership beyond words. We benefited, all of us, tremendously from the global commodity and financial boom of the mid-thousands, but with the rest of the world, we've paid a price since the 2008-9 downturn. Since then, the recovery of South Africa has been fairly strong, with growth of around 3% a year from 2010 to 2012, and the creation of new jobs that we have been for some time talking about, and which are recorded through all our reliable surveys. The challenge for us has been the fact that the global economy has been less than supportive, with a double-dip recession in Europe that has only just come to an end. This has certainly added to the challenge of recovering from the downturn. Similarly, slow growth in the US and China points to the fact that we cannot simply wait for the global economy to take off and carry us with it. In these circumstances, all of us need to explore new opportunities for investment and growth, and of course, certainly strategies, how then to move forward. Having said that, for South Africans, growth can only be necessary, but it's not sufficient. And therefore, it is not a goal in itself. And those of you who are familiar with the government policies, you'll know what is the history of the Department of Economic Development. In the past year, if the past year has proven anything, it is that economic growth on the path of our history is not sustainable. Our society cannot continue to sustain the profound inequalities that were entrenched under apartheid years. The conflicts in our workplaces and communities can only be reduced if we also deal with the deep inequalities left by the apartheid. In the words of a wise pope, if we want peace, we must all work for justice. True, in the past 2 decades, the democratic government and ordinary South Africans have done a lot to address the legacy of apartheid. We no longer see overt discrimination in our education and health system. Our public spaces or our financial and market institutions are now open. Government has gone far to reduce the backlogs in public investment that deprived historically African communities from Soweto and Alexandra to Sekhukhune land and other rural areas. We need to think out of the box. We as government need both to ensure that we create a supportive environment for investors and to work with them to develop a more sustainable, diversified and equitable economy. But above everything, we need initiatives like this one, whereby entrepreneurs take a leadership role, similar to the principles of the RDP, to show government what needs to be done. Central to our response has been the adoption of the National Infrastructure Plan, beginning of 2012. The plan provides the basis for industrialization, rural development, and regional integration, all areas where we can grow our economy in a sustainable, inclusive, I wish I could say inclusive manner, while improving employment and equality. The core to the National Infrastructure Plan is the establishment of strategic integrated projects, or SIPs as we normally call them, that enable us to identify synergies and priorities across the country. Some SIPs focus on improving core infrastructure for the formal sector, including transport from Gauteng to the coastal, as well as electricity generation and bulk water system. I'm not going to go into details with all of them, but all what I can say is that we have, this is coordinated through IDC, and we have already seen substantial successes in implementing the National Infrastructure Plan. As a core indicator, public investment has climbed from a low of 6.8% of the GDP in 2010 to its current level of 7.6%. In 2012, public investment totaled 235 billion. And of course, we are calling for the private sector to really invest. We all know there's a lot of money lying around in South Africa, but we do believe it's time to invest and invest. Last but probably most important in the long term, we need to ensure that our new infrastructure stimulates productive investments, improving electricity, roads, rail, and telecommunications. Those who are familiar with the National Development Plan, you will know that there are targets that have been set for each and every sector that we should aim at saying by 2030, this is where we want to be. That applies to local economies as well. We are seeking to strengthen local procurement across the state. That's very, very important. There are huge budgets that are managed at this level. Not only for the build program, we have designed a range of products from uniforms to rolling stock for the railroads to some pharmaceuticals for local procurement. Secondly, the DTI's Industrial Policy Action Plan identifies a host of opportunities for diversifying the economy and strengthening our productive base. I'm sure the representatives of the DTI have given you information in this regard. Finally, we are seeking to build partnerships between business and